time then to welcome on board a management to understand how the business outlook is looking, and we're talking about Shalby Hospitals, and Shanay Vikram Shah, the president at the company, is joining us to talk to us about the strategy going forward. Shanay, hi, good afternoon. Thank you so much for speaking with us. First up, if you can begin by talking to us about your expansion plans, because we understand that you're looking at expanding by around 50 orthopedic centers in the next 3 to 5 years. What kind of revenue potential do you see from this, and how much capex would be involved?
Sure. Good afternoon. Essentially, we see that this portfolio of the franchisee business will grow up to 50 franchisees over the next 3 to 5 years. We have already signed up in 5 locations as we speak. We have 2 operational ones, one in Udaipur and one in Ahmedabad. There are 3 upcoming ones where we have already signed up, which is in Gwalior, Lucknow, Kanpur and Rajkot. Shalby has shortlisted 30 cities of strategic importance for us, whereby we are already in advanced talks at 6 other locations. So, we expect a couple of these locations to be operational. In fact, 3 of the 4 that are signed up will be operational in the second half of this year. And essentially, we are targeting a 15 to 20 crore kind of revenue in this year for the franchisee business.
All right, so got the point. Can you just talk to us about COVID and now the post-COVID? Of course, pre-COVID cases have declined, but how are you seeing a pickup in the rest?
Sure. So in terms of COVID, we are not seeing a lot of influx of patients. In fact, even during Omicron in January, we hardly saw any admissions of patients. However, having said that, we are already now, in fact, this is the first quarter I can say, which is the quarter 1 of FY23, where we are seeing a significant pent-up demand, because we are seeing a 25-30% kind of growth in the orthopedic as well as non-orthopedic surgeries that we are doing across all our hospitals. So that is a big upside, and I think which is why at the current run rate, we believe that 20% kind of growth in this fiscal for the hospital business from top line and bottom line perspective is clearly visible.
That's sounding good. Almost a 25 to 30% growth is what you are expecting. But can you talk to us about how the medical tourism is actually panning out? Because that was an important driver for you. Has that resumed, or do you think it will still take some time for the COVID normalcy to come by there?
No, in fact, if you look at the quarter 4 of FY22, we were already at about 80% of pre-COVID levels. And we believe that, we will definitely see a growth from the pre-COVID levels in terms of, the medical tourism also, because a lot of patients, like you said, have started flying in from Africa and Middle East. So, we will be seeing double-digit growth on medical tourism as well. In fact, as we talk, we are having at least 15-20 admissions on a daily basis from the medical tourism perspective.
All right. So just in terms of expansion, the way you all are working in, COVID was, of course, a tough time. You had to spend more. But you believe now the costing overall for the hospital sector or the new expansion that happens will be on the slightly asset-light model? Is that something which will be followed? Digital medical will be practiced much more than what it used to be earlier, as it was not allowed. You think these are some of the after effects of COVID for big hospitals?
No, without any doubt. In fact, the franchising model, as we discussed, is totally asset-light, where Shalby will not be investing in the land and building, and it will only invest about 5 crores on the medical equipment per franchisee, and maybe a very, very small amount from the working capital perspective. So we'll be able to spread into newer geographies at very low cost. Even from the hospital business perspective, the kind of opportunities that we are looking at right now, they're largely on the asset-light model as well, whereby, we'll be taking up the hospitals on an operations and management basis. The 2 upcoming hospitals in Santa Cruz and Bombay, as well as, in Nashik, are both on an asset-light model, both on a pure revenue sharing kind of basis. So, hardly any capex will be required on this front. And even in terms of the medical devices business in the US, we are not expecting a significant capex over the next 3 to 5 years there. However, we are expecting a huge top line and bottom line benefit to the company because of some of the new product launches that have been announced and the newer geographies where we are trying to penetrate at this point of time.
No, should I talk to us a bit more about that implant business that you were talking about? Because you were looking at expanding your geographical presence there, as well as in India. You were looking at, increasing your presence when it comes to knee implants, etc. What could be the revenue potential of it, and when will it scale up? Over what time period? And I'm sorry, you had recently acquired one of the companies as well. Is there more acquisition in the pipeline?
Yeah, in fact, the acquisition was about the medical devices business last year in May, whereby a little over 11.5 million to acquire the assets of the implant company in California. It's a 27-year-old company with a great kind of heritage behind it. More than 100,000 implants have been used in the US, and there has not even been one product recall, which is something really big for an implant company which has been in business for 27 years. The idea is that we are looking to expand. Now, of course, they've done business in US and Japan, whereby we will look to do about 100 crores of business in this year. And the newer geography for this year will be largely India and some parts of Southeast Asia, where we expect another 15-20 crores of top line. And essentially, this will be driven by new product launches. Like, in the month of May, we launched the Tahoe Unicondylar Knee System, which is a new product in the range, which is, again, one of the very innovative products in the knee replacement market. So, we see that in the next 5 to 6 years, we'll be doing about $100 million, in this business, across the globe.
Okay, Mr. Shah, we'll let you go on that note. Thank you so much for joining us and talking to us about how the overall outlook is looking like. So, a 20 to 30% growth is what the company is probably projecting at this time. We'll let you go on that note.